It's Q3 of 2020
Already.
Interest rates are at 5%. We've just swung from this strong seller's market into essentially a buyer's market. Like, buyers have negotiating power. Sellers, like, inventory's building. Contracts are falling out. Is now a good time to buy?
It just always comes back to that same question of, is this personally the right time for me? Irrespective of what's going on in the market, right? Because every personal decision that people make in real estate, that's what's going to drive their actual action, right? Not the market. You don't decide solely to buy or sell based on the interest rate environment or what's happening with prices. Yes, these things factor in, but it's not the single biggest driver. If you need to move to get into that area because your kid needs to start school there in September, your motivation is very high. You're not thinking about those other things, maybe secondarily, but not as a primary motivating factor. So it still comes down to a personal decision. But what buyers need to understand, because everyone's been so spoiled for the last several years, especially during the COVID years, because those mortgage rates and interest rates in general were being kept artificially low. So they're not real. They weren't ever real. Now, yes, if you got one, that's great. If you didn't get one, you're not screwed. This is just a reset of what's actually happening in rates normalizing. And I'll come back to the rates point in just a second, but buyers have to also recognize that there's immense opportunity whenever there's a shifting market. There's less competition, less chances of a bidding war, maybe a higher chance that you might get a closing cost credit, which saves you a ton of money, right? And transaction fees that you don't get to deduct. There's no benefit of paying them. So there's all kinds of ways in being creative now. If you're paired with the right people, got a good agent that's advocating for you, and you stay persistent, this can be an amazing time to buy. Probably one of the best, actually, in spite of all the negativity that the media frames this market with.
Absolutely. What I've been telling buyers is, in the previous market, when it's a strong seller's market, the win is to get a house. Now the win is you can actually get the house that you want out of all the pick. Like, you actually get to choose. You can kind of negotiate back and forth, and like, it went from you're lucky to buy a property to go buy the one that you actually want, and then refinance later. Like, you can always navigate that later.
And that's an amazing point, because the rate, most consumers are trained to make their decision based on the rate, or at least start asking it. They start their search, they start doing their research based on the rate component. And that's actually the wrong way to go about it, because this is not our parents' generation. Our parents took out a mortgage and probably kept it and tried to pay it off and lived in that house. None of us are gonna say, or at least our kids are not gonna say, I'm going home for Christmas to my childhood home. You will have moved probably several times during the course of your adult life because of either career path choices or just lifestyle, whatever it might be. So people just don't stay in homes that long. They definitely don't keep mortgages that long. Every 3 to 5 years, there's a huge turnover of the entire mortgage book, if you will, for the United States home ownership. About 20 something, close to 30% of homes are owned free and clear across the entire country. But the other 70% that have mortgages, the vast majority of them turnover every 3 to 5 years. I think this next turnover is going to be even sooner, because as inflation finally starts to cool off, we'll see lower mortgage rates. That's not that far off into the future, and I know we're going to talk about that in a bit. So your opportunity to refinance is going to be there, which means the rate you take out now, it's not really about that rate, because you're not going to have it that long anyways. It's not going to make a difference at all. What you really want to be focused on as a buyer is affordability, getting in at the right price, which you now finally, after many years, actually can control that narrative with a good agent, of course. So if you can do that, focus on payment, get in at the right price, and just get the place you want, like you said, then you've won. And your opportunities to restructure that debt and reframe things is going to be there in the future, but you'll at least be on the other side of it. You won't be buying in at a higher price. You'll be able to refinance the price you got, some time back to a lower rate and take advantage of all the upside.
Absolutely. And a saying we have in San Francisco is the average condo home ownership length now is 3 to 5 years.
Okay.
The average single family home is 5 to 7. So
there you go.
Such a short period of time. If you lock in a 6% interest rate today, you refinance in 2 years, and you're going to sell in the next year anyway. Does it actually matter that much? It's still a monthly outgoing expense.
Right.
Which leads me perfectly into the next question. What are you seeing with buyers that were shopping before rates jumped? What are they doing now? Like, what is their psychology? What are they doing?
Well, I think there's a select group of the market that was very rate sensitive, which means that they could only buy at the price points that the market was allowing at the interest rates that were available. And they were right on that edge, which means if there's an uptick in rates or if prices were to increase, which in some cases actually did happen, both components there, they can no longer afford to buy. So some buyers have been sidelined, if you will, which is really unfortunate, but it's also just part of the normal market cycles. They stay patient, they'll get their chance again. There's no question they will, it's just a matter of timing. Other buyers have kind of seen it as an opportunity now. They say, okay, well, you know, prices are flattening in some areas, maybe even cooling. And I think there's an important distinction to make there. We're not seeing price corrections to where this housing market is inverting. We're just seeing a lot of listing prices coming down to probably where they should have been, right? In the first place, and you know this better than I do.
Yeah, I mean, we're in Corte Madera for this shoot. We're in San Francisco Marin. Properties have appreciated between 20 and 35% year over year. Mm-hmm. Like, how does that sustain?
It's not sustainable. It was an unhealthy market, right?
Exactly.
No matter how anyone wants to cut it, there's nothing healthy about paying $500,000 over asking price. There's nothing healthy about a home selling in 2 days. You know, there's nothing healthy about any of that stuff. So this is all a normalization. So people need to just kind of take a breath and say, okay, 52% of homes last month still sold for over asking. They may not have been much, but that data is calculated even if it went $1 over asking. So that means we're not seeing this huge crash in prices, and that's not likely going to happen. I think that this is, you know, real estate as an asset class is going to hold the line. You may see some pullback, but again, that's just more of reality setting in for sellers and clients of like, okay, we tried to be a little too aggressive with this. Let's bring it down to where it should be. And if things are priced right, you know this, they move.
Definitely.
Right?
And a 5 to 10% appreciation year over year is good.
Yeah, that's phenomenal. That's a great, I mean, you're getting tax benefits in the meantime.
Exactly.
You've got appreciation on your asset, and that's the beautiful thing about real estate. If you took $50,000 and invested it into stocks, and you got an 8% return on that stock, it's based on the 50K. You put $50,000 down on $1 million piece of real estate, and if there's 5% appreciation, that 5% is based off the $1 million, not the 50,000 you put in, which is the beautiful thing about real estate in terms of its compounding and its powerful effect. So always a safer asset class for anyone to get in, regardless of what appreciation rates are at.
Perfectly ties into the next one. So real estate as an asset class has massively retracted, at least psychologically, in a macro sense. Do you think real estate will retract in the same way that sort of the tech sector, the energy sector, stock market has? What do you think?
I think it always just comes down to what's the alternative. When there's a pullback in something, there's always a beneficiary of that pullback. So if we play this out and think to ourselves, if real estate was to pull back, what does that actually mean? How do we define that? That would mean that more homes would have to suddenly hit the market and sell, either at a potential loss or at some kind of a discount to where we see real estate really cool off. What's the likelihood of that? All depends on the labor markets, right? The middle and high income earners in the United States are the people that own most of the real estate in this country. So something would have to happen to those labor markets, major disruption where they were losing their jobs and then having to sell their homes. And even then, if they sell it, they'd have to sell it at a huge discount. And the likelihood of that is small, considering that they're sitting on so much equity now, that even if they did need to sell it, they're going to still make money or come away with cash. And everyone needs shelter, which means they'll lose this unit of housing, but replace it with another, because they're gonna go somewhere. They're not gonna be homeless. So housing as an asset class, I just don't, at least at this point in time, given what we're seeing in the macro economy, see some sort of major correction or pullback. Are things shifting? There's no question. We're all experiencing it. Everyone is. Is this shift a good thing? I think it can be. And for those that are opportunistic and patient and really persistent in the market, you can get a much better deal now than you could in terms of price point. And if you just focus on affordability and payment, you'll come out ahead. But I don't see real estate, again, to answer your question, pulling back to a point where it goes into what is called correction territory.
Definitely.
I think it's just more of a cooling territory because it was running too hot. So this is welcomed by some people, actually, believe it or not, right?
Absolutely.
Yeah, it's just normalizing.
And then in that same regard, what do you see as the bottom? If we've eclipsed, say, mid-pandemic and now we're sort of trajecting back to some normalcy, where do you think the bottom is?
Well, the bottom would have to happen if we somehow had a flip from where supply and demand is. At this point in the United States, we still have an imbalance of buyers with their hand in the air saying, I want a house, and available homes. So how does the inventory side of things get fixed? Either we build more, which isn't going to happen because building permits are tough to get, labor costs, construction costs, most builders are actually slowing down. And they also are gun shy from 15 years ago. They overbuilt and got stuck holding the bag when the music stopped. They're very gun shy about that. So they're building extremely slow. So you're not seeing new inventory come to the market by way of builders. And then again, going back to the labor markets, unless something happens there, you're not just going to see a flood of homes hit the market. Will some people put their homes on the market? Yes. And a lot of that is cyclical. Some people are blaming the interest rate environment on this or what's going on in the economy. But look, there is a thing, and it's been said for much longer than I've been in the industry or you've been in the industry, called the spring buying season. And what just passed? Spring. We're in summer. Definitely. More people put their homes on the market because they're motivated and know that there's going to be people wanting to move into homes for schooling reasons, pre-vacation, they want to get settled. So that's a normal thing. So seeing an uptick in inventory in the spring, early summer was not some like, oh shit, the market's turning. No, that's a normal thing. That's a very, very normal thing. But I think we need to watch what happens with demand and supply. And right now there isn't a lot of evidence that those two are just going to suddenly trade spots. So as long as there's this imbalance, if you own a home, you're relatively safe as in terms of preserving that asset and its value. And if you're trying to get in, you want to keep, staying persistent so that you can get on that side of it.
Yeah. I heard something brilliant. I was listening to the All In podcast, and obviously the entire world's economy is now essentially fabricated together. Like, we live in a global economy. And wherever the bottom is of every industry, not just real estate, is probably going to be when these three things sort of all align. And it's when the Russia-Ukraine war has some sort of positive direction forward. It's when oil prices stabilize, supply of oil is stabilized, and it's when inflation in the US is under control.
That's right.
I don't see all those three things happening this quarter, probably next quarter. Like, it's a little while away. So in that context, as long as the psychology around money, recession, things being more difficult still exists, I think we'll stay in this sort of buyer's market.
Totally.
Until those three things align.
Could not have said it better. That's perfectly summarized.
Let me pivot for a second. Let me come to this house in particular. So this is a 5-bed, 3-bath, about a $2.5 million house in Corte Madera.
Beautiful area.
How would you structure the financing for a property like this? Like, what options are you seeing out there for that mid-2 price point, strategically, creatively, keeping monthly low, maybe buying back some points? Like, what are you seeing people do?
So the great thing about financing now, unlike the last time we entered some sort of a major market shift, which the one that is the easiest frame of reference is 15 years ago, you're not seeing mortgage products being pulled off the table. If anything, most banks and most lenders are getting more aggressive with creating access to capital. And what I mean by that is different down payment options. So depending on what your appetite is or what your preference might be, there was a time when if you wanted to buy a $2.5 million house, you had to put down an exorbitant down payment, 25, maybe even 30%, nothing less was allowed. You can actually finance a $2.5 million price point home with 10% down now. There's options for that. And who would do that? Well, I just gauge, and I don't have to endorse it, I just gauge what I see my clients doing.
Definitely.
And most of my clients that are very flush with cash, that have money, are opting for putting down less on a piece of property because they want to keep their money working for them elsewhere. They want it to get a better rate of return rather than sinking every last dollar they have into the house, because the payment is fine, they can afford it, they have good monthly cash flow by way of income or returns on other investments. So the wealthy always want to find their money or have their money working for them elsewhere, so they'll opt for putting down a little bit less.
Definitely.
So you can see an option for a home like this where if you wanted to put down a little bit less, yes, of course, the interest rate is a little bit higher, the payment's going to be a little bit higher, but if that's not as critical for you, then of course a 10% down payment option can be really workable. There's 15, there's 20, there's even 25. Why would you go that route? Probably because you want to keep the payment lower. So depending on what your appetite is as a buyer,
definitely.
If payment isn't really secondary and it's more about just getting in and preserving cash, you have a low down payment option available to you. If you really need to make this payment as cheap as possible because you're either uncertain of the economy ahead, your job prospects, your income prospects, or if that's just the only way you can qualify, then you have to put down a larger down payment. But the bottom line is, and the beautiful thing about it all is, you have range here to where you can you can lean one direction or the other. You're not just confined to only one option for buying a $2.5 million home.
Fantastic. I'm going to share that with every single buyer that walks through this place.
Okay.
Dude, I appreciate you coming out.
Leave the part out where I blanked out.
Yeah, no, you're fine, man. You're fine. Appreciate you coming out for this. This would be so valuable.
Oh, my pleasure, man. Thanks for having me. And make sure you follow this guy because this is one of the most tech-savvy real estate agents that this market knows. If you haven't heard of him, you absolutely will hear of him in the next few months. Just wait, huge things
I
happening.
guarantee you'll see my ads floating around if you don't know who I am. So
Yeah.
That's all I can say.
And if you don't see him, you're not on social media.
Cheers, brother.
Yeah.
Cool.